You're listening to Indications by the Conference Board.
Hello, welcome to Indications, the podcast series of the Conference Board on economic indicators and all else that you want to know from us about our economic data. My name is Bart van Ark. I'm Chief Economist at the Conference Board. And today we are speaking with Lynn Franco, my colleague, Senior Director of Economic Indicators and Surveys at the Conference Board. Today we're speaking about consumer confidence for the month of August, which was just released earlier today on August 25th. Lynn, welcome. Thanks for joining us.
Good to be back.
Good. Well, not a great day as far as consumer confidence is concerned. The markets out there and the forecasters were hoping, and so were we, of course, that consumer confidence would pick up a little bit from July. It was 91.7 in July. It declined from June. We had expected it to pick up a little bit, but instead it came further down to 84.8. And as a matter of fact, it is now lower than it was in April when we were sort of at the depth. So actually consumers are more pessimistic now than they were even back in April. So it's a bit surprising. So what has been going on here?
Well, we sort of see a combination of things. So, for instance, the major driver of this month's decline was the present situation, which fell from 95.9 in July to 84.2 in August. And what we're seeing there is consumers telling us that both business conditions and employment conditions deteriorated in the month. And I think we're seeing this across some of our other indicators as well, where sort of that, robust growth that we had as the economy opened is beginning to cool and flatten out. And we could be facing somewhat slower growth as the year ends. And we also had a bit of a decline in consumers' expectations. That went from 88.9 in July to 85.2. So there just seems to be sort of a cloud of uncertainty that's hanging over consumers that continues to dampen confidence.
But last month we felt fairly strongly that the decline that we saw in July really was related to the sort of new episodes of COVID, particularly in the south and the southwest of the country. That actually has improved in August. To what extent is this related to COVID and what else could be going on here in terms of uncertainty?
Well, I think we have a variety of factors. I mean, we still have COVID and the uncertainty and resurgence in some areas of the country. For instance, we've seen a sharp decline in consumer confidence in California. That has continued. We've seen a somewhat lesser decline in Florida. New York has seen a bit of a rebound. However, expectations remain very pessimistic. And Texas has seen a bit of a rebound. So I think COVID and the uncertainty surrounding it continue to play a key role. There's also probably the impact of stimulus or the lack thereof that has had a dampening effect on consumers. And unemployment, which continues, and we still have millions unemployed. So I think that also is impacting consumer confidence.
Yeah, it's not just COVID. There's really a lot of other factors, the fiscal stimulus, the whole unemployment situation that comes into it. One factor that's been very consistent is this sort of decline in concerns about people's own income position. That, of course, declined very rapidly in April and again in May. It then improved a little bit in June, but then again this month it actually declined quite a bit on people who thought their income would increase, and even people who thought their income would decrease actually went up. And isn't that a major underlying driver to be concerned about consumer spending and going forward if income doesn't improve?
Absolutely. I mean, we've only got 12.7% of consumers saying they expect their incomes to increase. That was at 24.7 a year ago. We currently have 16.6 saying they expect it to decrease. That was at 6.3% a year ago. And I think this is both due to the employment situation and consumers' concerns that, we're not going to be adding jobs at a very rapid pace in the coming months. I think some of the stimulus may also be wrapped into this. And it's very rare that we see pessimists outnumber optimists when it comes to this income question. The first and only time we had seen it was during the Great Recession. This is the second time, and it just seems to be that there's a lot of concern about consumers' financial well-being, and that could definitely cool spending in the months ahead.
Yeah, so that really sort of leads us a little bit to our forecasts, right? What's happening to the economy? I think most forecasters are expecting the recovery will continue. That certainly in the third quarter, but also in the fourth quarter, maybe a little softer, but still continue. But I think for us here at the Conference Board, it really means that we should be concerned about the overall forecast, in particular forecast for consumer spending in the second half of the year, and perhaps particularly in quarter four, right?
Absolutely. And I think, what our forecast is really showing is, we had sort of that sharp rebound in Q3 that was really just predicated on the reopening of the economy, but that it's going to be sort of a long haul going forward. We're facing possibly a contraction, a small one, but moderate in Q4, and a little bit of a pullback in consumer spending as well. So we really don't see, let's say, the rebound in Q3 continuing forward.
Yeah, and in that respect, indeed, we're a little bit below consensus in terms of our forecast to really believe that the economy, that this kind of index, but it's the same is true of our CEO confidence that we released last week. Again, sort of lack of confidence in going forward. So little consumption, little in terms of additional investment, and these things will all play into a weaker forecast. So one question that I get a lot here, Lynn, is, okay, and what about the stock markets then? Because the stock markets keeps doing very well. Thinks this, will kind of go away. So, are investors not paying attention to the consumer confidence index, or is there more going on that they see and that we don't?
Well, I think we see a bit of a disconnect between Wall Street and Main Street. In fact, we do ask consumers about the stock market or stock prices in our survey. And interestingly enough, they do expect stock prices to continue to increase over the course of the next year. We've got much fewer now expecting the market to head sort of in a downward direction. So even with that, that's not enough to lift consumer confidence. So it's really, I think, much more dependent on what happens, particularly in terms of employment and perhaps the stimulus as well, which could be a temporary boost, but not a long-term solution.
In a way, you could say it's another sign of disconnect, right? The consumer does see the stock market improve, but it doesn't make them any more confident. So it doesn't have this kind of additional effect to the economy, what happens in the stock markets. So let's dive a little deeper. It was interesting to look at sort of the buying plans. Cars went down quite a bit. Home purchases went down quite a bit. And particularly home purchase is kind of surprising because we still see some of the hard numbers that are coming in actual home starts. And so it's still looking pretty good. So would you expect sort of more somber news down the road there as well?
I think with home purchases, we may see a little bit of a rebound, given the fact that mortgage rates are so low. But when you take a look at both auto and home purchases, I mean, these are, long-term commitments. So I think if consumers are very concerned about their jobs and very concerned about their financial well-being, they're not likely to take on additional long-term debt.
Right. So we're in the middle here at the moment of the primary of the conventions of the Democratic Party, which we had last week, and the Republicans, which we have this week. This probably is still a little bit early for the consumer to respond to what's going to happen in the elections, right?
I think so. I think we'll have a little bit clearer picture perhaps next month. We've seen in prior elections where it's, sort of the economy sometimes that's really the major driving force. But I think with this sort of cloud of the pandemic hanging over us, it may take a greater role in determining people's selections as opposed to just where the economy is headed.
Okay, what else, Lynn, that is important in this index that I forgot to ask you?
I think we've pretty much covered it all. I guess one little bit of bright news, since we always try to find some bright news, is there was a little bit of uptick in the percent of consumers who said they intended to take a vacation. So we can see at least perhaps that some of that concern is slightly diminished. Of course, the travel is basically all U.S. focused, and the majority of consumers said the means of travel would be by car. So I think that's a little bit of bright news that at least consumers are feeling the need to take vacations, but they're still doing so driving as opposed to flying.
Yeah, well, I think that's a great note to end on. Not great news on consumer confidence. A little surprising to many of us that it actually went down even more, and that really creates concerns for the second half of the year. But for now, just take your vacations. Stay in the US, and it's a great country with a lot of things to see, and that might at least help consumers a little bit in being comfortable about what's going on around them. So, Lynn, thanks a lot for taking us through the data again. Please go to our website, conference-board.org, for any further detail. And also, if you enjoyed this podcast and this indication series or any other series that we do at the Conference Board, then please again go to our website or go to your favorite podcast channel. We're streamed on most of these podcast channels to hear the latest episodes, as we're adding episodes, a couple of times a week. So stay tuned. Thank you for joining. My name is Bart van Aert, Chief Economist at the Conference Board.
This has been Indications from the Conference Board.